Gold outshines all safe havens. Commerzbank. Canadian dollar is trading steady, outperforming on crosses. Scotiabank.
Pound sterling declines against US dollar despite firm Fed dovish bets. Drop in temperatures pushes gas prices higher. Commerzbank.
US dollar to Canadian dollar ticks up near 1.360 amid US-Canada trade talks.
Rescuers race to evacuate stranded Everest hikers by Tuesday, source says.
US dollar extending broad gains against G10. Scotiabank.
Oil. A small step for OPEC. Commerzbank.
Kiwi dollar is underperforming all major currencies and faces. BBH.
Euro US dollar approaches monthly lows with Fed, ECB speakers on focus.
That loses the most from this. The Wall Street Journal says that Ford is the plant's biggest customer and is expected to warn investors about possible impacts when it reports later this month. All right, let's check the futures.
Parallels to last year's copper price surge, Commerzbank. Euro is soft and trading defensively, Scotiabank.
Good morning. We're going to get the 15-minute past updates. Here it comes.
Parallels to last year's copper price surge, Commerzbank. Euro is soft and trading defensively, Scotiabank.
Gold outshines all safe havens, Commerzbank. Canadian dollar is trading steady, outperforming on crosses, Scotiabank.
Pound sterling declines against US dollar despite firm Fed dovish bets. Drop-in temperatures pushes gas prices higher, Commerzbank.
US dollar to Canadian dollar ticks up near 1.360 amid US-Canada trade talks.
Rescuers race to evacuate stranded Everest hikers by Tuesday, source says.
US dollar extending broad gains against G10, Scotiabank.
Oil. A small step for OPEC, Commerzbank.
All right, so good to see you. Welcome to Forex.Today, the YouTube community. More than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. So today I suggest that we go through the fundamentals and technicals. We'll check the market sentiment indicators and really get ready for an awesome Tuesday. I think the government is still shut down. Is it? I don't know. Are we going to get FOMC meeting minutes tomorrow? I don't know. We'll have to look into that. But today we do have Canada. Yeah, in 12 minutes we have the Canadian trade balance. And then in an hour and 42 minutes, IVPMI. So let's get on with it. Let's go. Ba-ba-bum. So welcome to our squawk. Let me post it for the members. Things are a little strange these days as I transition to 2.0. So every little piece of help is welcomed, I'm sure. So anyways, let's go through our process. Here's our calendar. You can see the big one really is IVPMI. This is the big one if it was going to be more of a market mover. But really, if you're a foreign exchange trader, where's my marker? Okay. So if we are looking at the Canadian trade balance, then what we're talking about is C plus I plus G. That's a closed economy. Okay, we'll call this Cuba. Doesn't do any international trade really. There's some foreign direct investment, but I think that's long gone. But nonetheless, we'll call that a closed economy, and that would be how you'd measure it. Consumer spending, business spending, government spending. Cool. But we're foreign exchange traders here in the free world, which means we have to include spending by foreigners. Cool. So what I'm getting at is X minus M is right here. How much stuff is Canada selling to foreigners, and how much stuff are Canadians buying from foreigners? And this will lead to either a surplus or deficit, and uh, that could lead to a strong currency or to a weak currency. And so that's why you want to pay attention to that. Now, Canada wants to sell more stuff to the world than it imports, and that would be right as rain. But something pretty terrible is happening in Canada right now. Yeah, so it's ugly, for lack of a better word. Oh, speaking about ugly, I'm drinking my coffee with my bone marrow and my MCT oil and my ghee. But now I got a mix of 10 different super mushrooms, and it turned my frothy, fluffy coconut ghee uh, creamer black. So now it's got a black foam. Mmm. Yeah, and the taste is good good for you. It tastes good for you. Oh my god. Yeah. Oh, Nicker. So that's that. Oh, smokes. All right, where did they there's yeah, that is just wrong. Uh but apparently these mushrooms help regulate your sugar and levels and your insulin levels and stabilize them, and so my goal as a diabetic would be stable sugar levels with half the medication. Right, Denise. Yeah, I believe that is the strategy to use. IVPMI is a market mover. This seems to be okay. Mhm. So is it going to improve or not improve? Euro is already weak. Does it looks like it looks like no matter what happens, euro dollar is to the up. The only thing that's interesting about euro dollar is maybe it's a double bottom, but whatever. Yeah. Oh yeah, so I did my police academy yesterday, which was really cool. Um, and I might have an interesting opportunity. We've discussed me starting a financial fraud prevention program and maybe even a cryptocurrency fraud protection program. And I actually joined the police force, and yeah, I joined the police department and become a lead or support a special task force. Wouldn't that be cool? Hey, some people go golfing, but they're like, you know cryptocurrencies? And I'm like, I studied them at MIT. It's a pretty good response. They know. Yeah. But apparently, a lot of senior citizens in my affluent city are being hit by scams, and it's a serious problem. Like a lot of money. And so I thought I would at least, you know, at the very minimum, speak at community centers or churches or old folks' homes um, about um, financial fraud and cryptocurrency scams, and just educate, do the public speaking, represent the police department. And I think that would be cool. I think that would be a good way to support the community. Morning, Maida. Okay, just kind of burning through some charts here. Yeah, the USD yen is, yeah, up, down to the moving average, and then back up, slowly ticking up. I think we were talking about that, I suppose it was yesterday, as far as the implied vol. This is just hanging in there. I think I've crossed the 400% mark on that. Wait, Mexican peso. What am I in? Euro, rand. Yeah. All right. So, um, but it should be correlated with this. Mm. So this would be hanging around, doing okay. Dollar's strong at the moment, huh? Yeah. So what do you do? Well, if you're a bear, somewhere between the 1 hour implied high and the 4 hour implied high, you would look to sell. So you could put this on the to-do list, pull that up, and then look for daily pivots that are pointing down, all that kind of stuff. Big dog. Yeah, let's look into some of these really big turns. Really, really big turn. A lot of this is response to the Japanese government bond market. And so how long will dollar stay strong? I don't know. Here's the double bottom I was talking about. So if you were a bull, for example, um, you know, not only are we on sort of a role reversal, it's also the implied, okay, which has nothing to do with the pattern. These lines have nothing to do with the pattern. It's just mathematical ranges. So based on what euro dollar usually does, you would say, well, this zone is a buy zone. Now, a lower low doesn't usually create a good buy, but how about a double bottom? So that's when it gets interesting, because one scenario is quite different from the other. So if that holds, then this is your target, because you're going to be a bull. And then notice if let's do another color here. And if you do get there, then you're probably going to do this. You know, now we're talking 2 days from now in the future, right? So your plan would be drop into a euro dollar hourly chart, or look at the 4 hour, or look at the daily, and try to decide how important would this double bottom be if it forms. And if it's important, like maybe there's a daily pivot here, or a weekly pivot, or a monthly pivot, then you have made a strategic decision to, if a double bottom forms, to get involved. We call that tactics. So then you drop into a 5-minute chart, and your plan for the rest of the London afternoon, the rest of the U.S. afternoon, and into tomorrow is this. Yeah. And this is how you should be thinking. It's not about the next 2 hours. Are you thinking 24 to 36 hours in advance at the very least? I hope so. Now, we know the yens are great, and they really popped, and they haven't dropped back. But, I used to measure something that I called frequency. But now if you Google, how to, frequency technical analysis or something, you'll get something quite different. Now, because I didn't have any technical analysis education, and there were no gurus, and there were no books, and all that kind of stuff, I'm self-taught. And so what I was measuring was the peak to valley. And, all of this is bullish. But, each one is, less of a higher high. And to me, it made me think of an oscillator of, an oscillator if it was a sound wave frequency. Sound waves have, how wide and how tall are the cycles in the note. Okay, so this would be a low note. Whoa. Right? And so I'm like, oh, well, that's kind of like this frequency just turned sideways. And so in this case, what I'm noticing is it's bullish, but it's slowing down, which makes us more vulnerable. I think, okay, the question is, when is 2.0 ready to launch? I think tomorrow. Yeah. I think tomorrow. So I was thinking about, if it looks like it's going to be tomorrow later today, that I should probably do like a special event or something, huh? Yeah, me too, Jim. Oh, yeah. Well, Richard, that's a great opportunity to step back. Two things that help in that situation, Richard. So now I'm going trader psychology here. Um, Change your environment for a little bit. So if you normally sit at your desk, like here, I'm sitting here, or the rig behind me, if I'm stuck in a negative routine, one of the first things I do is I just stand up. I grab my laptop and I'll go to Starbucks or something. Just change the environment. I'm like, whoa, whoa, whoa. There's some negative energy. I'm sitting in a pool of stool. Emotion. But I change the environment. If I'm still making poor decisions, then I'll purposely change my behavior. So whatever I was doing, I just will not do that, and I will not do what I normally do, because somehow I slowly got to the negative behavior. So I'll just change the behavior, do something like way different from my normal decision making process, and that's, I have a term for that called putting for dough. And so, anyways, putting means I'll spend the next day or two or a week, whatever amount of time I need to get back on track, doing 25 pip scalps. So I'm not trying to be smart or powerful or all-knowing. I'm trying to make pissy little trades, and I take out much of the decision making. So when I say 25 pip putts, it means I set my chart. So let me go to Trader's Way. So let me open up my Trader's Way account. I hope all you guys are using a trustworthy and ethical broker. I'm so afraid of getting sick. I'm only sleeping like 3 or 4 hours a day. I hate when I get sick. But anyways, all right. Let's go back to here. Let me get this set properly. Let's put this on euro dollar. Okay. Thank you. So what I do is I go to my auto stop. Okay. And I should have it saved on this machine. Okay, 2020. So in this case, it's 2020, not 25. Okay, 2020 OCO. Boom. So what that means, as soon as I make a trade, it puts a take profit order 20 pips in front, and it puts a stop loss 20 pips behind. And now I'm done. So there's no risk management to my decision-making process at all. It's only 20 pips, so it's not like a long-term strategic. It's not fundamentally based. It's not really seasonally based. I mean, you can add those things, but my goal is to build confidence, right, Richard? Because I know how you feel when you say, man, I feel stupid. Yeah, okay, well, we need to break that. So the next thing is, so how do you go from stupid to confident? And that's really all I'm working on in a scenario like that. And so I might open up, let's say, at the right time of day, and TRADARS helps you analyze what the right time of day is, and on the right currency pairs. Okay, you should at least be doing the right things at reasonably right time. And then you go to work. And maybe on 3 or 4 or 5 currency pairs, I pop off these trades. But now there's no risk management involved. So all I have to do is get the direction correct. That's all I have to do. And I will sit there for hours, days, and weeks if necessary until I can at least get the direction correct. Like, forget about the complexity. Dude, is it going up or down? It's going down. Then sell it. Like, what the hell? Oh, well, I need to have 17 levels of complexity to make a decision. Really? Why? Okay. And so you'll build your confidence up that you have capabilities. And then you can add the layers, of complexity, right, Richard? That's what I do. And I've done that for many, many, many decades, right? That's how I handle that. So the first thing is change your environment. Get up. Can't take the day off. You're losing money, for crying out loud. So you got to get up and get to work. But, okay. First, the easiest thing is change your environment. I sit outside and trade a lot outside. Right? And sometimes it helps the focus. Like, for example, one night, do you remember when Russia attacked the Ukraine? Okay, I sat right there. So on the outside of my window, so I have a nice office. I get a big view of the lake, 3 windows. Beautiful. But my office has a patio. I know, right? Yeah, so I have a patio with a view of the lake. And it was dark. I can't remember what time of year it was, but it was dark. So for some reason, I'm outside with my laptop, sitting there. And it was more like, okay, this is something unusual. The market's in duress. The stuff is hitting the fan. And I don't want to treat this like just a regular old, it must have been an Asian session. It was dark. So like, okay, so Tokyo's open and the markets are moving and the world is freaking out. I need to not treat this as a normal situation. So quite literally, I just grabbed my laptop and sat outside. And I'm like, and just be hyper focused. Okay. And I believe I was trading. So now, see, I remember. So obviously, I was hyper focused. Euro, Norway. Why? Well, if Europe is cut off from Russian energy, they still need energy. So they're going to likely get it from Norway first. Sell the euro by no. Yeah, cool. Right there. So that's quite literally what I do. I change my environment a lot. And if that still doesn't work, then you have to change your behavior and earn the right to make, the big boy decisions, right? Yeah. So like it's pretty, we're in a situation, we'll go back to what I was already discussing. There's only 2 scenarios here. Why be so complicated, right? There's only 2 scenarios here. And so you have to decide what those 2 scenarios are and when you know that they're occurring. One scenario is up, the other one is break. So what are you going to do? Okay, great. So now we're done strategy-wise. We're done. It's done. We're done. Strategy, we're done. Okay, so now you know the price. Okay, we know the price, the important price. And now you're just measuring time. Cool. Are you going to buy it or are you waiting to sell it? What's your plan? Okay. So are you going to try this When are you going to pull the trigger? Have you decided? Why not? Okay. You should decide. Are you going to, we're in a green zone. Is this viable? Remember, this is our bottom. Okay. Are you going to buy a higher high, higher low this way? Are you going to wait for the 2155 to cross and then buy it? So that would end up looking like this. Like when? Okay. And so imagine you waited for one of these to occur. And I got my 2020 OCO, correct? So all I have to do is get this right, up or down. But I want to get a lot of these right, so I have to think, well, what's the probability of of this weekly pivot holding? Double bottom, green zone. Is that, what is the probability of me getting at least the first 20 pips of something happening? Well, the cool thing about that is even if you're a bear, like, so if you're a bear, it probably looks like this to you. Well, I don't know. I can't quite see, but, I probably still earn my 20 pips because we're doing price action, not strategic direction. We're not doing fundamental bias. We're just putting. Now, if you don't know the story, why I call it putting for dough with an OCO. Now that stop process, I showed you where there's a stop below and a stop above. That's called one cancels the other. OCO. One cancels other. It's a type of order. I even described this on Bloomberg television. That I use it. So when was that? 2009? Yeah. But anyways, so I've been doing this a long time. Hey Richard, man, I've been making mistakes for a very long time. So anyways, so I should be able to just knock down a 20 pip putt. Now the putt strategy I learned from Phil Mickelson, who one time was the world's greatest golfer. He was the Tiger Woods before Tiger Woods. And then Tiger Woods came along and stole the show. And Phil Mickelson was an amazing golfer. Tiger was better. So, but they both had respect of their peers. The problem is Tiger was winning all the major tournaments. And as a professional, especially if you're going to be a Hall of Fame golfer, you need to win the majors. But they were all going to Tiger. And so here you had Phil Mickelson being so good, but always close, but never the champion. So he finally, and I think it was at a Masters, he got really close. And on the last hole had like a 6-foot putt to tie or to lose. And he missed. I laugh because it's a lot like trading, Richard, right? Where I can imagine as a golfer, he says to himself, I have to get this. If I lose it, millions of people are going to see. I'll never have a chance like this again to win a major. Tiger's going to get everything. Don't miss left. Don't miss left. Don't leave it short. Don't leave it short. Don't miss left. Don't miss left. And so you hit it way too hard, way too right. And that's it. The whole audience goes, oh. And your mind, you just collapse like a wet paper bag in a monsoon, right? And so he missed Oh, the disappointment. So he created a personal strategy for this because he has to stay confident. So in his backyard, he built a putting green, and he's got that putt recreated in his backyard. And so every single day, he will make that putt 100 times in a row. So what does that mean? Well, if you get to putt number 72 and you miss it, you start again at 0. So anyways, fast forward into the future. He got himself in a very similar situation at another major. But that time he walked up and he said, oh, this is 6 foot. I got this. I'm going to knock this down and win my first major. And he walked up, squared up, boom, in the cup, champion. But that level of confidence didn't come from arrogance. Okay, there's ego and egotism. Ego is the confidence to say, oh, dang it, I missed that putt and lost the tournament. I will do whatever it takes to ensure that never happens again. And you double down and you get strong when you feel weak. That's ego. Ego is good. It gives you the strength to get out of bed and do what needs to get done. Egotism is an unfounded, unwarranted confidence. So if you miss the putt, you're like, yeah, I'll get it next time because, I know I'm going to win. I know I'm going to be champion one day. Maybe it's positive affirmation. I'm good enough. I'm smart enough. And gosh darn it, I'm going to be a Hall of Fame golfer. I just know it. Well, it turns out what actually is important is you have ego that says, if I'm going to be a Hall of Fame golfer, I have to earn it, and I will use my ridiculous, sickening work ethic and make 100 putts in a row every single day or die trying. Versus, oh, I just know it's going to happen. That's egotism, and egotism's bad. So really, you want to focus on ego, and that's what I mean by rebuilding your confidence. You have to be confident under the stress and duress. And you have to truly earn it for it to truly work. So my version of Phil Mickelson's strategy is, if I'm in that situation and even changing the environment doesn't work, then I have to rebuild my ego, the good ego, the one that says, I know I have what it takes because I'm willing to do anything, and I actually do it. I'll go to Harvard for 5 years so I can learn 5% more about fundamentals than I did before. I'll do whatever it takes. And even if I didn't learn anything new about fundamentals and macroeconomics, I did build up my ego. Not the arrogance type ego, not the unfounded ego. Yes, it's nice to flex that I have a couple of Harvard degrees. For sure I flex that. Oh my God, but so would you. But the second thing is, that 5 years at Harvard grad school was impossibly difficult. And they've canceled the program. We had a 50% dropout rate, even though 99% of the applicants weren't even put in, they were rejected. So you had to be the top 1%, and 50% of them didn't even finish. And then they canceled the program. And I got an A, right? I'm an A student under something that has now been determined as too difficult, too hard. So did it build my ego? Yeah. All I had to do was not sleep and do the impossible. And that builds confidence, that ego, which we need, Richard. So now I can say, well, I can do anything. I can do anything, Richard. But it's not out of like, because I'm so smart, I can't control that. And also, smart doesn't always help. It usually helps. But you know what's even more important? Work ethic. And I've always thought that yes, you do, in particular in our business, yes, you still have to make good, logical decisions. That's intellect. There's nothing emotional about that. But the other side is that ridiculous, sickening work ethic helps keep the emotions in check. I'm not the type of person that says you need to trade without emotions. I think that's dumb. I think you're one thing that you have that the machines don't have are emotions. It's your edge. But you need the ridiculous, sickening work ethic. And by the way, I've been doing a lot of AI development. Let me just tell you, AI is stupid. It's not like what they say. Yeah. So, yeah, it's not smart. It does lots of work quickly, but if you don't know what you're doing, it will just destroy you. So anyways, so yes, you need to be smart. Yes, you need to be able to make smart decisions and interpret data and all that kind of stuff. But ultimately, I think that what builds your ego, the good ego, is work ethic, right? So that's where I'm like, I don't care if it takes 5 trades today, 25 trades this week. If I'm still in a rut, do I have the guts? Do I have the strength and fortitude to sit and do 2020 OCOs for the next month until I've earned it? See, the whole point is earning the confidence. Can you do 2020 OCOs 100 times? Are you trying to get 75% winners, 80, 90, 100? Yeah. And that has definitely helped me from time to time. So I'll show you how it works. So let's say I decided to buy. I'm not saying it's a good decision. We haven't even made a higher high. But anyways, let's just say I made a decision. I check, make sure I got my smiley face. Okay. And I go buy. Okay. And there it is. My stop, my limit, and now I can't touch it. That was either a good decision or a bad decision. Remember, I'm not trying to be smart or intellectual. I'm not trying to make money. I just have to hit this stop, or right, this limit, not that stop. All I have to do is get that right. And if I did that 10 times today and I got half of them right, I'm not doing a good job. If I'm getting 70% of them right, yeah, okay. At least I know that. But I might say, well, I got to do that for 2 or 3 days in a row. At least 2/3 of them should be winners. Whatever you're trying to accomplish. Okay, so 2/3 of the time. So imagine this let's say you did this every day for a week and you ended up doing somewhere between 25 and 50 trades. And what if you knew 66% of the time it worked every time? Now you have some quantitative data. Your tactical ability to buy at support or sell at resistance over a decent data set, and remember, you need at least 30 trades for it to be a minimum data set. So if you did 30 to 50 trades and found out 2/3 of the time you're correct on your at least the first 20 pips, then guess what? You have an earned confidence. So now you're like, dude, pulling the trigger is not a problem for me. What I want to do is focus on letting it run beyond 20 pips, and therefore I'll need bigger time frames and I'll need bigger analysis like fundamentals and seasonality. Okay? And all of a sudden now you're entering's not the problem. It's the rationale that you're working on. And letting things run. Well, how do you let things run if you don't have any confidence? Well, we all know that that's impossible too, because you're going to be so happy to make 20 pips. Well, I think you should be embarrassed. Right? Yeah, like imagine. So I think I still have that trade. Oh, look, there's my euro trade. So there's other ways to trade. I mean, look, you don't have to be embarrassed about a 20-pip trade, but if that's all you do, yeah, you're running a fool's errand, right? So, right? So, well, should I close that OCO? I'll leave it for now. So, look at this on this. So on the first day of August, basically, right? First day of August, Euro Rand. I've earned almost $60 in swap, but I only have $100 risk. Well, it's not even risk anymore because my stop is at break even. But I used $100 of my capital. We call that margin. And I've already earned 60% of that back in swap. But in pips, I'm up $350. So I have over $400 profit on my $100 that I put up for the trade. That smells like 400% to me. Total return. And, if you built positions like that, then all of a sudden, like a 20 pip trade is kind of silly, isn't it? You're like, really? And so what do you need to do tomorrow? You got to do 5 more trades and pull 20 pips out. And if that's all you do, then what do you do the next day? Another 20, another 20, and another 20. And sure, you might make a few hundred pips. Okay, great. But how sustainable is it? Are you earning swap? No. You have to maintain 2/3 of your trades as winners, but then 1/3 of your trades are losers, taking out 1/3 of your winners. So now you only have that last 33% that is creating your entire career. And you have to do it every day without fail, which just in of itself seems impossible. And then you're getting paid for your time, really. Because if you go on vacation and you don't make your 5 trades, you're not going to earn anything. right? So instead, if you added to your repertoire, not just tactical trading, but you had some strategic trading, what we call portfolio, then you can make money while you're on vacation. But you have to think differently than a scalper or a day trader. You need to know how to do those things. I'm not saying anything bad about those things, but if it's all you do, you will never, that's an absolute term, never, right? Never become wealthy as a trader. To be wealthy, your money has to make money. Wealthy people, you say it. You can't stop money from coming in when you're wealthy. I grew up poor, so I find it very fascinating that you get to a point where you're like, no matter what you do, just more money keeps coming in. And you're like, what? And then you run into all these rules. So you're like, what do I do with all this money I have? I have too much money. And they're like, well, you can't put it in that account. So you're going to have to put it in this new account. And that account you don't pay taxes on. This account you do pay taxes on. This one you do some taxes. And then you're like, all of a sudden you're like, Jiminy Cricket. And then guess what? All of that money just makes more money. And you have just more and more and more money. And I want you to focus on that. How do you get there? Right? Like there's just weird things like how much money does your rental apartment make you? Like, Wayne, it doesn't make me any money. It costs me $2,000 a month. All right, cool. Okay. And just let's say my house that I own makes me $2,000. Now it's not cash flow, but it's net worth. But I live in it and it just makes money. You're like, no matter what I do, it just makes money. How much money does your car make you? None. Okay, you should have a crappy car. You should have a nice asset. A car, I don't consider a car an asset, really, because I believe an asset makes money. It has to go up in value or produce an income. Other than that, it's just a waste of money. Right? And so I want you to have that mindset with Forex. If you go on vacation and you no longer make money, then at the very best level of society you can achieve is rich. Now, you won't be rich that day because you're not earning any money. In fact, you're spending money because you're using your bank account. So now you're rich, but you're spending money and not earning money at the same time. Now, you might feel wealthy, but see, everything, when you're wealthy, everything is free. When you're rich, you have a lot of money, but everything costs you. And you're like, oh, well, I make enough. It's the tortoise and the hare scenario, right? You make a lot of money, so you're the rabbit. Well, you know, a fancy house won't hurt. I make a lot of money. A fancy car lease payment, okay, no big deal because I make so much money. Oh, that fancy vacation, that doesn't matter. I can go to the nice hotel. I can spend $1,000 a day at the pool bar. It's okay. I make a lot of money. Now, a wealthy person what they do is they take their money, let's say they buy an apartment building. Now they don't have any money. See, wealthy people don't have any money. So they own this apartment building and rent comes in and you take the rent and you pay the bank the mortgage. So with your $1 million, you buy a $10 million apartment building. So the bank puts up most of the money. And then the rent comes in, you give most of it to the bank and to the insurance company and to the management company, and you don't really have much cash flow. You don't have much money, but your net worth is high. 5 years goes by, the value of the property goes up, and rents go up because it's a good time in the economy. So the value of your apartment building goes up, both its net asset, but also because of cash flow. So if you're doing the time value of money, you're like, well, rents are up, it's worth more. The value is up, it's worth more. Meanwhile, for 5 years, renters paid down the mortgage. So now your mortgage is cheaper. And so when you refi it, you get some money in your pocket. So you take that, you go to the Lambo store and you buy yourself a Murcielago, and it's free because you're using the renter's money. And you're like, oh, I had this money sitting inside of an account, so you can't even see that money. It's just on your computer screen. And you're like, so on my computer screen, I kind of take that money and put it towards this building, and somewhere there's a record that says I own that building, and the management company collects all the rent and manages all that crap. So I guess I own it. And then 5 years later, you refi it, and you're like, now I got all this, I got 300,000 in cash that just came from nowhere. I'll buy a Lambo. And so now you got this apartment building still. It's still flowing cash. It's still increased your net worth. And you're driving a Lamborghini. And you're like, I didn't do anything to earn it. You see? Versus a guy that makes a lot of money and he says, you know what? It's only $5,000 a month. I can lease it. I got $5,000 a month. I make a lot of money. So one person would use their cash in their account and lose. The other person gets it for free. And then the odd thing about it is, well, you get to count it. You got a $300,000 Murcielago that does count as your net worth. So in trading, going back to what we're trying to talk about here, in trading, you want to have a mixture of cash flow and net asset value increases. Two ways to get cash flow: scalp or day trade. 25, 20 to 30, 40 pip trades. Great. That's one way. So you pick up pennies in front of a freight train, but you can make money today. Day trading, you can make money today. Great, cool. Just very hard work. Because to me, I always think about the opening of There Will Be Blood. Have you seen that movie? And he climbs down this rickety old ladder down into a mine, and he's chipping away with a little pickaxe and a little bucket. Yeah, that's scalping. That's scalping. It's hard work and it's dangerous. And if you don't do it, you don't get paid, right? Okay, but it's a good skill to have if there's gold and diamonds down there, yeah. But I want you to have the other mindset too, and that would be, once you're in the trade and you have your stop at break even, it doesn't require more work or more of your time. So the difference between a 30 pip trade and a 300 pip trade is not effort. It doesn't require you extra work. So that's a wealth trade. if you got your direction right, you did all that during the first part, the analysis part. You pulled the trigger and you said, well, this could be worth 300 pips or more. The tactical entry is hard work. Letting it run requires no effort. But you might make 10 times more money with no extra effort, just better decisions. You see? Cool. And the other income side is, in many cases, like the trade I showed you, I'm earning income doing nothing. So I already got 60% of my money back. Think of that. So my mortgage, let's say, it's not really a mortgage because it's all cash, but the price I paid for the apartment building, I've already got 60% of that back. So now I have only 40% of my initial risk. And in about 6 weeks, I will probably have no risk at all. None. I've already received my money back, and I still own the asset, and it still pays me income. And, well, once again, if I got my direction right, it keeps making money while I sleep, while I'm on vacation, while I'm working on other things, while I'm volunteering and doing my community service. You know, I mean, all this takes time. Like I do at least 3 hours a week community service, which means I don't go golfing. So it's helpful to have this combination of rich and wealthy. And I want you to have that as a mindset, as a trader, and later on as an investor. That you have the trader and investor mindset, right? So I run a group, the CIA, the Council of Investment Advisors. We should have met yesterday, but we're under special circumstances. And but nonetheless, I think it's an eye opener for a lot of people in the group where we think like traders because we're traders. But then suddenly joining that group, we're investors. And after a while, you see, you feel, you're aware of how dramatically different the observations you make are depending on which mindset. And I think that a big takeaway is trying to combine both. You see? I'll say that's a great observation, but are you thinking as a trader or as an investor? Oh, you're right. You know, and then we can discuss that. Well, as a trader, what do you see? But as an investor, how would you think about it? So I guess one way of looking at it, it would be, what if you had two trading accounts? One of them, the only thing you looked at was your chart. And on the other account, you had no charts at all, just fundamentals. Yeah. And of course, what we're trying to do is both, right? Yeah. When building a portfolio in Forex in particular, you'll need to know seasonality. There's a time to build. We call that accumulation. And then there's a time to not build or maybe even sell, and that would be distribution. And so knowing when to plant the seed and when to harvest is important. I think you'd agree with that. You're a farmer, you kind of need to know when to plant seeds. And as a farmer, you kind of need to know when to harvest. And believe it or not, such cycles exist. Absolutely exist. Absolutely exist. And you should know. Yeah. So that's kind of my challenge to you is how do you combine both? You should be working on that over and over and over and over and over again. I would summarize it this way. 99% of the work is you deciding whether you should buy or sell, when you should buy or sell, and then actually doing it. So if that process is worth anything, the trade should last more than 20 minutes. What if it lasted 20 months? You're like months, 20, that's years. Yeah. I make decisions based on decades, not in Forex. But you can. And so how far out are you looking? But imagine if 99% of the work was simply getting to the point where you pull the trigger and drop a stop. If that decision is good, it could be worth a lot more money than what you're paying yourself because you're so happy to make 25 or 50 pips. Like, have you ever closed a trade because you made 100 pips? Why? You're so happy to hit triple digits? If you dump a trade because of the number of pips, you don't know what you're doing. Why did you close it? I made 100 pips. Why does that make you feel good? You got your head screwed on wrong. That makes you feel good? Why? Does the market know your entry? Does the market know you just hit 100 pips? No. Why don't you ride it out to the pivot point? Why don't you, that monthly pivot point? Why don't you ride it out to the annual pivot point? Why don't you stay with the trade as long as the monetary policy makes sense? Why not be in it for, like, for example, and there seems to be another long delay on YouTube, so I'll ask the question and then I'll answer it. But how long will the Fed stay in cutting interest rate mode? Maybe not every meeting, but in the mode of they're thinking about cutting interest rates or not cutting interest rates versus not cutting interest rates, or versus not cutting interest rates and raising interest rates versus raising interest rates. There's a lot of scenarios. So right now the theory is either cut, or cut, pause, cut. But both of those are generally the same. Okay, great. So what if that generally created dollar weakness? Is dollar weak today? No. But what if that was your thing? What if that was your thing? You're like, well, I wake up in the morning and I want to sell this, which means euro dollar up. Okay, so it could also mean pound dollar up, Aussie dollar up, Kiwi dollar up, USD CAD down. Because we're not analyzing euro or CAD or pound. We're only doing the dollar. And so the rest is now just technical analysis, isn't it? So if euro dollar sets up for a buy, you buy it. And if it works, you move your stop. And what if you never touched it again? And the next day you look for the same. And the next day you look for the same. And the next thing you look, and the Fed keeps cutting, the dollar stays weak. Okay, so that's now monetary policy. But then you do further research and you find periods of time in which the United States dollar is normally weak anyways, irregardless of what the Fed is doing. Because in the last, let's say, 20 years, there are times when the Fed was paused, the Fed was cutting, and the Fed was raising. But despite all of that, and geopolitics, right, or even just local politics and all this kind of stuff, all of it is always going on. But what if you knew, or right, what if you had stats that said October through to January? Generally speaking, what if, and these are not numbers, but I'm giving you the thought process, okay? What if during this period, over 20 years, 75% of the time, the dollar was generally weak? And based on your analysis of now, this year, here and now, monetary policy and debt levels and other things that you're looking at, import, export data, impacting the value of the dollar, those things put you dollar bearish too. Then why would you take 20 pips profit on a scenario where you're selling dollar against euro? Why would you do that? If you thought there was a 75% chance in general it goes up for 90 days, but in particular, this is a dollar bear year because of our current circumstances, well, those are big decisions. That's a big thought process, right? So why don't you say small trade, and then it goes up and you don't take profit, and then you get another small trade, and then you move this stop to break even, and another small trade, and another small trade, and another small trade. And at the end of this period, which I often call a window, as you roll into December, you find that you're in 35 trades. Okay? In my humble opinion, you will make significantly more money than a scalper. Yeah. But it requires a lot smarter trading, doesn't it? You have to know monetary policy. You need to understand levels of inflation relative to productivity. You have to understand seasonality. And then on top of it, be awesome at technical analysis. You're like, Wayne, that's difficult. Yeah, I know. You thought getting rich was easy and quick? Okay. You see? All right, let's just do a quick overview and then I'll let you go. I won't go super in depth today. We got a lot to do. Let's do it this way. I think I'm supposed to put this up. Macro. Let's do our macro. So I guess today's theme was trader psychology. If any of this made a connection with you, whether we're talking about, um, the trading strategy component or the trader psychology as far as rebuilding the good ego, let me know in the comments what made the connection. Because that's my goal is to make a connection, make it different. Oh no, the data died. Hang on. Wait. Finally, it was up an hour ago. See, I babbled too long today. Oh no. Ah! Yeah. All right. So I got a launch today or tomorrow. The database is taken down. So I got to